All right, I have 6:01, so we'll go ahead and get the training started tonight. For those of you who don't know me, I am Jillian Hawkins. I'm the Assistant Executive Director here at the IDCCA, and thank you for joining us for tonight's Nuts and Bolts Virtual Training Series program. Tonight, we are happy to be joined by Chasse Rehwinkel. He currently serves as the Director of Banking at the Illinois Department of Financial and Professional Regulation. He's the former Chief Economist for the Illinois State Comptroller's Office, where he worked on issues of state liquidity, public budgeting, and access to capital. Prior to that, he served as the Director of Policy and was the Chief Policy Advisor for the Illinois State Treasurer, an office which oversees the state budget of $25 billion. And in addition to his roles in the State Comptroller's and Treasurer's Office, he's worked in a number of state and local government roles, and we're very happy here to have him join us here tonight to talk about municipal budgeting. I think everybody on the call here tonight has attended one of these trainings in the past, but if you haven't, everybody will stay muted during the training. Please just put any questions you have in the chat box and we'll read those off at the end. So without further ado, I will turn it over to Chasse.
Thank you so much, Jillian. Hi, everyone. My name is Chasse Rehwinkel. I will get started with our presentation. As you can see, I've grown out my beard in honor of COVID. So I'm fully absorbed into the remote learning right now. So I appreciate everybody inviting me to this event, and I'm excited to talk about municipal budgeting. So one second. All right. So as I said, my name is Chasse Rehwinkel. I'm the current acting director for the Division of Banking. But I've been in a lot of different fiscal offices and in positions here in the state. I've been called a general fiscal nerd, so I'm very excited to be able to talk to you about a project or an issue that's near and dear to my heart, and that's municipal budgeting. So I'm going to start off, and it's going to sound like we're 10,000 miles away, but we will get to the end of it. And the question is, why do we govern? So one of the more important questions to ask, why there is government, what are you doing in terms of governing, is that government is to address negative externalities. An externality is a third-party issue that comes up that society as a whole is maybe not adhering to, that cannot or will not be addressed by society as a whole. So let me give you an example. You have a need for firefighting, but nobody necessarily wants to pay for individual firefighters for their house or for their neighborhood. That is a public good, and that's a public need, and therefore we pay for firefighters. Believe it or not, at one point in time, and there are still jurisdictions to this day that had private firefighters, and the result of that was houses burned down, because not everybody paid for a firefighter, and if you didn't, and your house caught fire, that could cause issues with your neighbors. There's a common good there. Therefore, we need to address those issues. You can say the same about a clean water system or public education for availability to everyone. Almost every externality that we deal with in government involves some type of funding or requires some type of revenue to be addressed, okay? There's a difference between funding an item and collecting revenue as a result of it. Therefore, budgets, think of them as being the major policy statements for the government. What you budget for says everything about what you're trying to do as a government. On the federal side, you see more items related to national defense, international trade, things like that don't touch on the local level, but you have everything from the Department of Commerce to agriculture, items like that. State government in between, there's state budgets are a lot of facilitating money between the federal side and the local side, but dealing also with education, dealing with rollouts in different healthcare, as we can see right now during the COVID pandemic, or like in my agency, which we deal with bank regulation, items in that area. And then on the local government level, that's your frontline budgets. Those are maybe direct public safety around police or firefighters. There are also park districts and local schools, things like that have direct influence maybe on your day-to-day lives. So how are governments funded? Usually governments are funded through a basket of revenue options, and that's in order to keep them stable and equitable. Doesn't work all the time, but the idea is to make sure that you have a series of different funding mechanisms for the government in order to prevent a disaster in one of those items becoming less dependent on revenue or goes away in some way or fashion. And it balances out who is having to pay for that budget. If you look here on this slide, that's the Chicago Corporate Fund, and you can see the breakdown between the different resources in that fund. This is the general fund that deals with the city of Chicago. And you can see that it's not even amongst those different revenue sources, but there is some attempt to balance out so that different revenue sources don't dominate over the usage of the budget. So revenue is usually derived from 5 basic areas. You have tax revenue, non-tax revenue, intergovernmental transfers, prior year savings, which is less common, and general investments. So let's take those at a time. So taxes. The vast majority of government revenue from most governments comes from some form of taxes. Usually on your local government end, you'll see taxes make up half or even more of the revenue source for that entity. Taxes are involuntary fees on individuals or businesses and are enforced by the government entity in that government entity's jurisdiction for activities, and they take different forms. So you have sales tax, which is a type of consumption tax imposed on the sale of goods, usually at the point of sale. So when I'm buying something, that's when the tax is incurred. Then you have property taxes, which is an ad valorem tax, which is an assessment, usually on the physical property of an owner or business, so that that comes derived usually annually to pay for different items for that government. And then you have income tax, which is leveled on the income generated by a business or an individual, usually over a year, but not always, within their jurisdiction. Income taxes are not common with local governments, although not impossible. There are local government jurisdictions in which income tax is an item that they do charge. I will say that it is not something you see here in Illinois, but in New York and other states, you might see income tax. There are other taxes as well. Excise taxes, those are on specific goods like a gasoline tax or a cigarette tax. You have estate taxes, which is on inheritance. And then you have severance taxes, which is usually around natural resources or some sort of building there. Okay, so let's talk about non-tax revenue. The other major component of local government is usually your non-tax revenue. These are broken up into different buckets. You have fees, permits, licensure. So those are like usually some sort of service that's happening. I want to open up a business. I want to build a deck on my house. I want to use a public facility. That allows you, I want to do an event. Those are direct fees for those services. Or licensing an activity, like I want to be a barber here or something like that. Then you have fines, which is a monetary penalty, usually against some sort of a negative action like illegally parking or dumping trash where it's not supposed to go. Then you have rents or concessions or royalties. These are things that the government could charge for, but don't. They actually sell that right out to a private market contract, and those incur revenue. So in the city of Chicago, the famous one is the parking meters have been sold off for a private company that collects revenue off of them. The money made by that government off of that deal is considered a rent, concession, or royalty. And then you have government industries. So if you have a government-owned water system, or in some places, government-owned golf courses. The revenue derived from those end up being revenue pulled into that government and goes into your non-tax revenue. Other forms of revenue. So we'll get to the other pieces here. You have intergovernmental transfers, especially on the local level. Other intergovernmental transfers can come from your federal or state, or if your county down to your municipality. And they're usually either temporary funding or for a specific program, grants, things like that. You know, Medicaid flows down, K through education from the federal government and state flow down to different government bodies. Then you have savings. These are usually unintended prior year costs, but they aren't always. Sometimes you have rainy day funds where there's a feed into those savings and that revenue carries over. Other times you have like a one-time event that caused an appropriation from previous budget to not be met and therefore rolls into the next year as revenue. A good example would be during the COVID pandemic, the budget that was passed on the state level had a lot of travel for different employees, whether you're doing examinations or things like that. Well, during the pandemic, obviously, there hasn't been as much travel. That wasn't foreseen necessarily. So that money wasn't expended and therefore savings in terms of revenue for the next year. It's not direct revenue, but it counts when you're talking about this bucket of your budget. And then you have investments. Usually this is made through your treasury, whether that's on the county, city, or state level. And that's on the holding of revenue. It's usually fairly invested and held. And the earnings off of that goes toward different pieces. You could also have one-time expenditures. You sold an item, a capital item, that's technically realizing an investment or realizing a purchase and can find itself there. Okay, so this is one of my favorite graphs from a good friend of mine, Dan Hertz, who now works at the city of Chicago, but at the time was working for a nonprofit budget group. And this is the city of Chicago, and this kind of shows the general flow of money. So on the left-hand side there, you have the different types of revenue. You have service revenue, property taxes, grants, intergovernmental revenue, local non-tax, local taxes. And they flow into different funds, which we'll talk about here in a second. And then those funds go to specific items that they're spent on: debt, pensions, libraries, things like that. In this case, departments. This is a simplified version of the money flow of the city of Chicago, but all governments have this kind of flow. You can see here the complex version of the money flow in the city of Chicago. So here are the very specific different revenue sources, the different funds, and then flowing to those general activities. So just a good idea to show how that money flow works. Okay, so before we get to funds and the other piece of budgeting, I want to leave on this piece of revenue, something that is always important to keep in mind. There's a term in economics called a Pigovian tax, which are taxes that are used to correct a negative externality cost that's not being addressed by society. You can see that graph down there. There's some sort of supply cost to something. There's some sort of demand, but there's a societal cost that's greater than that. Let me give you an example. Cigarettes. Cigarettes have a negative impact on the health of a community, and that causes other costs that are not being incurred by the sale of those cigarettes, right? So we decide to put a tax on there in order to either change that behavior or make that burden so that money can go and address some of those health needs. It's very important, though, that when you are determining a new tax or fee, that the underlying social need for that tax or fee is clearly identified, and the behavior that results from that tax is clearly understood. And here's why. If you have your cigarette taxes, right, they're called sin taxes, and the goal is to correct a behavior of people smoking. You want less people to smoke, okay? if that revenue goes toward education materials on getting people to not smoke, or healthcare costs that are caused by the people that smoke too much, that's self-contained. It's an efficient tax. But if that revenue instead goes for education costs or overhead somewhere, then that government has now become dependent on people to smoke, and therefore you're almost encouraging people to smoke in order to fund your government. You don't want to have that setup occur. And it's important to think through those items when you're thinking about a new tax or thinking about the efficiency of a new tax or fee. Remember, the behavior has to be self-contained in order to not have the government itself dependent on that bad behavior. Okay, I also want to talk about home rule. Home rule status is essentially when you can you have any power to do any function unless specifically prohibited by doing so in state law. The reverse of that is a non-home rule municipality, which can only exercise powers when the authority is expressly provided by state law. So the home rule municipalities, when it hits for revenue and budgeting, they usually can levy their own taxes, make their own decisions without having to adjust to state law or doing some sort of public referendum. Whereas the non-home rule municipalities, they unfortunately are not able to do that. So it's good to understand the differences when you're trying to figure out your basket of tools for revenue. Okay, let's talk about funds. So governments use fund management to keep track of specific revenues. If I'm doing my personal at-home budget, usually have just one banking account, maybe two. But governments want to make sure that revenues that are coming in are being directed for specific services. So they keep multiple funds to make sure that they can account for committed needs, for committed resources. There are different types of those funds. That's generally why you see like the state having 600, 700 different funds. It's so that those revenue sources don't sometimes get directed to something that they weren't intended to be spent on. It keeps better management of those sources. Most important fund for most governments is your general fund. In Chicago, it's called the corporate fund, but general funds are usually your uncommitted resources, the vast majority of your revenue outside in the budget. And they're used for uncommitted purposes, usually for the administration and overhead operations of the government, your main pieces. When people hear the state budget was this or the city budget was this, they're usually referring to the general funds, not so much the other committed services. Sometimes they are, but usually they're just referring to the general fund. You then have special revenue funds. They are used for specific situations, for specific revenue collection to get at a specific problem. Think of those as like a stormwater management fund or a mosquito abatement fund that have specific taxes or fines or penalties for something that clearly is going for a service. Then you have debt service funds. These are entirely based on to tracking and retiring debt. And that's all they're used for. All governments have those items. And then you have your capital projects funds. Not all capital type projects exist in the capital projects funds, but most of them are. And that's for construction, rehabilitation of capital assets, such as buildings, equipment, roads, things like that. And then you have a permanent funds. You don't see these very often. They are a separate class of fund within governmental funds. They're an unusual fund, and then you're usually not supposed to spend the principal. They are there to grow assets, and then the earnings off of that growth get distributed. Probably the most famous example of this is the Alaska Permanent Fund. That is oil revenue that is pulled in by the state, and then they distribute the earnings off of that fund to everyone in the form of a dividend check, kind of just a direct payment, a version actually of universal basic income that is using their resources for. Don't see those very often, but they are a separate class of fund. Okay, now there are things that are not considered governmental funds, but you will see in your budget, okay? And these are usually broken down into two groups. You have proprietary funds, which are usually when you have a governmental industry or some sort of service that needs to have some sort of business type accounting within it. So O'Hare Airport, for instance, has its own fund, right? That's considered a proprietary fund. Enterprise funds are also like that. These have almost private sector type accounting rules to them, and they exist in government. So they have like a specific purpose, but aren't considered governmental funds. And then you have fiduciary funds, which are usually funds that are held in trust by the government, but aren't considered part of their expenditure budget. They have specific purposes and they're being held for that purpose. The most common of those is pension funds, okay? So that's a fiduciary fund. You also have other trusts and models that are sometimes education funds, things like that. Usually when you see those recorded in a government ledger, they have trust fund labeled on there somewhere, or pension fund. Okay, so let's balance the budget. Like all budgets, government budgets are balanced on a basis of assets, things we have, and liabilities, things we owe. A perfectly balanced personal budget or household budget might have a zero balance value. All the money that is coming in is going out specifically and everything is balanced on a T. But I think you'll be pretty clear that that's not the best way to manage a government. No government should have that kind of accounting, okay? The goal is the dream is to have a large amount of funds revolving to make sure you're meeting those daily needs without having to dip below the balance. But governments from time to time will have to spend more than they actually take in at that period in order to move that money. And then theoretically at the end of the year, they are made whole, or they try to reconcile that budget. Doesn't always work. On the state side, you are required to reconcile that budget, but there are years when you are off or liabilities creep between budget years. So this is where, how do we balance our budget better? Some reforms are like multi-year budgets, where you have, or multi-year budgetary plans, where you can plan not just for the current fiscal year, but maybe 3 or 4 years in advance. It can adjust over time so that those cash flows become consistent and you have some melding between the different fiscal years. I want to be careful about a couple of things, though. Beware of household budget traps. There's always people that say, I want to balance this government budget like I balance my household budget. That's not how a government budget works. It's never worked that way, and it will never continue to work out that way. I've also heard we need to judge everybody every year, knock out their revenue down to zero, and then build them up, and that'll be our budget. That's called zero-based budgeting. You start everybody at zero, and then they justify how they get up to their budgetary number. It sounds good in practice. In certain cases, it works. In a lot of cases, it takes a long time, isn't totally unnecessary. And you spend a lot of money to do that. So remember, government budgets, they follow different rules because your intention is not necessarily to make money. Your intention is to meet the needs of that community. And that makes cash flow and some of the budgeting tools here uneven at different points in time. All right, so let's talk about your main officers here and what they do. So you got your budget officer, budget director. They're in charge of the holistic management of the budget. They're usually drafting the budget. They're talking with all the different agencies to make sure that they understand the budgetary needs of the government. Then you have your revenue director, also sometimes known as your tax collector. They take in all of the revenue and make sure that it's collected. You have your comptroller, sometimes controller. They're in charge of writing the checks. They're the they do the government expenditures, and they're the outflows. Sometimes they're also responsible for the accounting system for that government. Then you have your treasurer, which is in charge of investments in safekeeping of government assets. They usually, try to grow your account, or they choose the investment options that make sense for that local government. And then you, of course, have an auditor that is in charge of reviewing this entire process and making sure there isn't waste, fraud, abuse, or error going on with the budget. Not every government has all of these items, but all of these items are covered under every government. You might have a government where your comptroller and treasurer are combined, or that your revenue director and budget officer are combined. There are even some governments where all 5 of these are the same person. I want to tell you that that's not a good practice. And here in Illinois, we have been punished in multiple ways for having too many combined of those positions. Famously, the reason why we have a separately elected comptroller and a separately elected treasurer is at one point in time, those were not separately elected, and embezzlement happened, huge embezzlement. And so they separated those positions along with the auditor to make sure that there was some sort of balance of powers there. Dixon, Illinois had one of the largest municipal fraud cases in US history. That was also a situation where the comptroller for the office and the treasurer for the office was essentially the same person, so that there was no balance of powers. Okay, I'm coming to the questions. I know there was a lot to dive into. I just want to say before we get to the question point, I want you to remember to review your Kafir, which is the document at the end of the year that is your comprehensive annual fiscal report, okay? It has everything in there, has all of your funds, has all of your revenue, has all of the different headcounts and positions in there. It has your economic output. It is also probably the least read document in all of government, even though it has everything in there. I have said this for years. If you want to understand what your government is doing for you, what policies are important to them, you need to understand that document. And for you running a government or being part of a government or trying to elect somebody to government, that's important to understand too, so you know where some of the problems or some of the successes are. So with that, I think I'll turn it back to Jillian for questions.
Just to go off your last point here, I think we have a few candidates on the line with us today, as well as some first-time office holders. So do you have any advice for either candidates or for first-time office holders of kind of where to begin? There's a lot of information to take in, and do you have any advice on where they should start?
I think it's important from a running for office perspective, and I've been a policy director on political campaigns before. The policy of what you're going to do in the budget is not necessarily that important to know on a campaign, but you do want to know what your office is doing, what its budget is, where it gets its revenue from, and who controls that budget. And the way you do that, depending on where it is, local or state, is usually whatever municipality that is public information. Your Kafir is public. If it isn't posted on your website, you should be able to call the state comptroller who's supposed to collect those Kafirs. Sometimes local governments don't hand them over, so that reminds the comptroller to go ask them for that document. So you can collect that information and make sure that you understand what's going on. The other thing is there are plenty of budget experts, people like me, that you can reach out to other electeds that maybe have talked to that'll absolutely talk to you about some of the problems with your specific budget, bounce off ideas. I love talking about this stuff day and night. So if there is some of that sort of issue, there are plenty of elected officials that'll call me and be like, hey, I have this idea for our pension. What does it make sense for the budget? And I'm happy to go over those items with folks.
It seems also like there's a lot of misconception in the public's mind about how government budgets work. You talked a little bit about how everybody wants to do the budget like they do their home budget. Do you have any recommendations for elected officials about how they can talk to their constituents to kind of get that point across that it's not like your household budget.
Yeah, I think that's been a winning campaign strategy for a long time for people to say, I'm going to treat the budget, I'm going to get the waste out of this budget, and I'm going to cut it down to its core, and I'm going to treat this like our household budget. I think another winning strategy, though, is explaining why you are budgeting for this stuff and be like, you want to elect me because I'm going to get you money on education. I'm going to get you money. I'm going to help you. When you're constantly looking at the budget like a household budget, you're going to be forced to make cuts that are unnecessary to that budget, and that drains the state or local government from its resources to help people pave their roads and build those bridges and help those schools. So talking about the things that the budget gets you, thinking of it as a policy document, like these are what we want to do, I think is the best way to go about that.
Well, I am not seeing any other questions come in the chat. If you've got a last minute question, go ahead and put it in the chat now. I'm going to put my email into the chat though. If you have any questions that pop up as you're thinking about it. Oh, we've got one. Okay. Somebody running for a county clerk. Welcome. Thanks for joining us here tonight. If you've got any questions that you think of later on, feel free to email me and we'll get the answer for you. Everybody who was on the training here tonight and anybody who registered is going to get a copy of the presentation if you haven't gotten it already, as well as a recording of tonight's training, so you can go back and refer to everything we went over tonight. And I think that finishes up our questions. We've got a question coming in.
Yeah, let's see.
All right, Patrick, you're running for county clerk and you're looking to save money. How can I find the price tag per election in primary?
Yeah. So county clerks, their budget is usually folded into the annual Kafir. They usually have their own appropriation line in there for the county budget. And I see you're thinking about RCV, so ranked choice voting. To see if you can save money on that. So usually if it is listed in the Kafir in their budget, and they usually break it down by expenditures, it'll be a general cause on there, and it'll probably be like, there'll be some sort of equipment cost, and then there'll be a head count for elections. And it won't be clear necessarily that it's elections, it'll be staff related to those. So if you know somebody in that county that has some familiarity with, the staffing breakdown of the county, the county clerk, then they can kind of tease out what that cost is. If you had a specific Kafir, I'm sure we could take a look at it. And if you wanted to send to Jillian, and we could try to see what that might look like.
Right, and they wanted to know what's the best way to find that document that you were talking about, the Kafir?
So usually on your county or city website, there will be a documents page, and they are required to have those. There's a best standards for posting the Kafir. If you don't see it there, because not every municipality has a website, some of the county pages are a little bit weaker, they don't update all the time. In a lot of cases, you can actually call the state comptroller's office, and they can help you find it. They have a local debt recovery office and a local debt office, and it's on their website. But if you don't see it even on the comptroller's website, I believe there's a contact number on there.
And we had another question come in about the home rule municipalities that you discussed. Looks like it's an issue in southeastern Illinois, particularly about the minimum wage. And do home rule municipalities have the authority to do things such as set a higher minimum wage?
A lot of them do, not all of them though, and it's outlined sometimes in their own statutes. Some of them require a referendum be passed in their municipality. And that's usually in your ordinances, which again, should be found online. There is usually a clerk as well for municipalities that collect that information on meeting minutes, things like that. And that should be in your ordinance piece. But like, so for instance, in Chicago, which has a higher minimum wage than Illinois at different points in time, that had been voted on by that municipality. That didn't necessarily need state approval, but it depends on the municipality, unfortunately. You have to look at the ordinances.
All right, well, that looks like that wraps up all of our questions here tonight. Oh, we got one more that came in. Okay, looks like we'll connect you guys. Looks like Patrick wants to talk a little bit more about the county clerk's budget. So
happy to talk to you, Patrick. We'll connect.
I'm gonna put my email here just one more time into the chat for everybody if you don't have it already. Thank you so much for joining us here tonight, Chase, and for sharing your expertise, and thank you for that presentation. And thank you everybody for joining us here again for our virtual training series, and have a good evening.
Thanks everybody. Thanks for having me.